everyone, and welcome to another podcast episode here with Albert Ramos and the Warriors Group. Today, we're going to be giving our market predictions for 2023. We're also going to be talking about a little bit about foreclosures because I've been realizing and I've been seeing that a lot of people are starting to ask me about, foreclosures, pre-foreclosures. What does it mean? What is a short sale? And I want to make sure that I break it down to you guys, to the most common denominator, meaning breaking out Barney style, how we said in the military, and explain it to you guys. But before that, I want to start. We started fresh in 2023, and Happy New Year's to everyone that's watching this right now. I want to make sure that I start the year by giving you how is it that the real estate market is looking for the local area in Southern California here as of January of this year. So right now, as of today, we have 25 coming soon properties. These are properties that have been identified, that the people want to sell them. They're just getting them ready to be posted as active in the MLS. We have 151 new listings in this area. I just want you guys to understand that what I mean by Southern California, I mean the local Temecula, Menifee, Murrieta, Wildomar, Lake Elsinore. We can even go down as Oceanside, San Marcos, Vista, and Escondido. Okay, so that local area. And the reason why I do that is because a lot of my clients are within this area. And also, a lot of my clients are service members and active duty military and veterans that are looking to buy. And I need to get the actual information out there for you guys. Okay, so new listings, 151 listings. What does that mean? What does that mean for all of us? What this means is that there is a constant flow of listings coming into the market. The market is not frozen. Has it slowed down? 100%. And I will cover that here pretty shortly on what is it that exactly means for us. But let me keep going, okay? This is drastic, okay? 183 price changes. Now, I want you guys to understand this, okay? So in total, we have what? Let's do the math here real quick. 183 plus 151. We're talking about 334 active listings right now that are in the local area, okay? Now, back on the market, 73 homes have been back on the market. Back on the market, what does that mean? That means that they accepted an offer, and for X or Y reason, the home fell out of escrow. It could be the home's fault. It could be it was a shitty home, and then the sellers, when they did the property inspection, realized that they didn't want the home anymore. Or it could have been that the buyer could not secure financing. There is a plethora of things that could have happened for the home to be back on the market. Now, active under contract. This means that they accepted an offer. We have 46 homes that are active under contract. Pending is that they are in the middle of escrow right now, and we have 157 homes. Remember, this data is within the last 30 days. Okay, so we have 189 deals that were able to be closed. We have 232 deals that expired. What does that mean? That means that the home was in the market for the term of the contract, and contracts in real estate are usually anywhere from 3 to 6 months. Okay, what that means by expired, it means that the contract actually expired and the seller didn't want to update the listing. Okay, didn't want to renew the listing contract. Okay, so canceled, we got 32. What this means is the seller said, like, hey, you know what? My home's been in the market 2.5 months. I know that we have a contract for 6 months. I don't want to keep waiting. I'm going to go ahead and take it out of the market, right? Because I want to rent it. And again, this is just an example, okay? On hold, this means that they're pending to buy, to accept an offer is 29 homes, and withdrawn, This means that, hey, you know what? We don't want our home listed anymore, but we don't want to cancel the contract just yet. It's 27 homes. Ladies and gentlemen, in the comments right now, let me know, what do you think that this means? I would like for you to tell me, what do you think that this means? Because in my own professional opinion, this doesn't seem, as of right now, that the market is indicating that it's going to crash in the local area. Okay? You got to remember, real estate is something that is very regionalized. Okay? Just because the market might crash in Boise, Idaho, it does not necessarily mean that it's going to crash in Riverside, California. This is critical information for y'all to know, because you need to make sure that you contact someone that is not going to give you information. Let's say, for example, you're from Florida and you have a buddy that's in Florida. The real estate market in Florida might not be doing the same thing that the real estate market here in Southern California might be doing, because they appreciate and depreciate at different rates. Okay? Something that's very important for you to understand. In my professional opinion, the real estate market is not crashing here in Southern California. Also, my forecast for 2023 is that the real estate market is not going to crash here in the local area. Home prices are decreasing. Interest rates are now starting to balance. What does this mean? This means that people are seeing that the interest rates are remaining, in between the low 6 to the high 5s. So people are realizing, man, I'm ready to buy. I'm ready to buy right now. I'm ready to get a good deal. People are paying down closing costs. They're not only paying down closing costs, they're also helping buyers to buy down their rates. So if you ask me, when is it better to buy a home right now in 2023 or to buy a home in 2022? In reality, it's all the same. Or let's even put it out there as 2021. Let's say if you were to buy a home in 2021, you had to come, even though the interest rates were low, the prices of the homes were rising and were elevated. Let's keep that in mind, because that's important to know, because you're paying, everything is averaging out. It's just that now, in my personal professional opinion, it's a more real estate market because you don't have a ton of buyers out there fighting, putting outrageous offers on these places. Now you're getting an equal amount of buyers, and finally the demand is starting to catch up, and now there are rooms for negotiation. Ladies and gentlemen, in my professional opinion, 2023 will be a buyer's market and will remain to be a buyer's market. Let me put this as an example. If you bought a home in 2022, early 2022 or late 2021, where the interest rates were in the 3s and 2s, you were paying at a minimum, you were paying $30,000 over asking price. And you had to pray to God that the home appraised. Because if the home didn't appraised, you have to come out of that money out of your pocket. Okay? Now, the tables have turned. Now, you're paying, let's say, $100, $200, $300 more that you would have paid 6 months to a year ago on your monthly payment, but you're getting a better deal on a lower interest, on a bigger interest house, but on a home that is actually worth what the home is actually worth and not a inflated price. That's very important for everyone to know. Just because you think that the interest rates are high does not necessarily mean that you're out of the real estate market. Okay? A year ago, 2 years ago, you might have qualified for a single family residence in Temecula, right? Now, you might only qualify for a condo, a nice condo, but only a condo, because the rates have actually decreased your purchasing power. And that is something that I want everyone to understand. Can you get into a home? 100% you can get into a home. Now, that's when the communication needs to happen in between yourself, your spouse, or your significant other. What do we really want to do? Is it worth buying right now? I'm a huge advocate for buying. The reason for it is because you get absolutely nothing from renting, just paying other person's mortgage, right? But when you buy, you start to develop home equity. One of the most important things that I want you to understand, ladies and gentlemen, for those of you guys that have not been in the real estate or haven't studied real estate the way that I studied real estate is not a short-term goal. It is not. It is a long-term goal. That means anywhere from 5 to 7 years. And statistics actually show that first-time home buyers hold on to their properties for at least 5 to 7 years. So if you buy a home now, do not expect, have the plan in your mind to hold to that home for a minimum of 5 to 7 years. On a bare minimum of 5 to 7 years. Because what that is going to do for you is going to allow you to grow equity inside of your home. It's going to allow for your equity to keep going up while you pay your mortgage down. And that will put you in a situation for you to succeed, because now you can actually rent it for the amount of money that rents are going for in that area, and will allow you to actually make a profit. Not only that, if you decide to sell it, now after all the costs are taken out of you selling your home, you can actually make a decent profit out of your home. That is why it's so important to make sure that we understand that we have to plan ahead for real estate to be a long-term goal of minimum 5 to 7 years. What I've seen and what I'm starting to see, I'm not starting to see a lot of foreclosures. I'm not starting to see a lot of pre-foreclosures or even short sales. However, I came across one very recently, very nice home in a very nice community. The home needed some love, but this is where active duty service members and veterans are going to win. Let me put you this example, right? The home was listed for $519,000. However, it was a foreclosure sale, and that was the seller's break-even point. What that means is that they were not going to be in the hole if they got $519,000. That's important, and put a pin into that. Because when I actually went into the MLS and I looked it up, the information with the conditions of the home was in, which the VA would actually let someone live in the home. It wasn't like the home was like all messed up, holes in the roof, none of that stuff. It was just maintenance stuff, cosmetic stuff that needed to be fixed. However, compared to the other homes in the area, it was definitely in the low side of it. So we were like, hold on a second, this home is actually not worth $519,000, even though when I did the CMA, which is the comparable market assessment, the true value of the home was around 560 to 580 after everything was fixed. So I was like, well, you know what? Let's offer them $500,000 instead of the 519. And that's when I called the agent and I was like, well, instead of doing that, how about we do it a short sale? And the difference in between a pre-foreclosure and a short sale is that with the pre-foreclosure, you're negotiating with the seller still. The seller have a say in it. When you are negotiating as a short sale, you write up the offer and the offer goes to the bank. Okay, and the bank is going to have to be the one that is going to have to accept or deny the offer. Okay, so in situations like that, if you have a well-qualified buyer, you can actually offer, and this is the offer that we actually put in it was instead. Remember, the home is actual worth is $560,000 to $580,000. We offer $480,000 on that property. We're still waiting to hear back, so make sure that you guys follow me and keep in the loop of what is it that's happening with that actual offer that we put for that client. I want to give also my prediction on new constructions. I want someone, because the last few clients that I've had, that I've taken them to new constructions are designed for you to fall in love with them. They're very nice. I love selling new constructions. It's just that you got to understand that the approval it's not the same for a new construction that it will be for a pre-existing home. And I also want you to understand that once you look at a new construction, you will never most likely look at pre-existing homes the same way. The reason why I say that is because when you look at a new construction, everything is brand spanking new. And then you expect that when you go to a pre-existing home, that it's going to be the same as a new construction. And it is not. A pre-existing home is a home that's already been lived in. Okay. And some people, you might see that they actually make their home theirs, or they just live inside of the house. It's a house. It's not a home. It's a difference in between the two. So you got to understand that, because whenever we got to be as realistic as possible whenever we are looking at new constructions and whenever we are looking at pre-existing homes. You might, even though a new construction is very attractive, you have to see in the financial situation that buying a new construction would actually put you in. New constructions, specifically in this area, will land you in a higher monthly payment. And it's not even going to be your mortgage principal or your mortgage interest that is going to affect you. It might be your property taxes. Property taxes are usually higher in new constructions because that area is being built. That's something good. That attracts a lot of people. I personally love that, right? But I caution you that if you're in a good financial position, but you're not in the best financial position, in order for you to buy a new construction, consider pre-existing homes. If you're in a good financial, now you're probably thinking, Albert, but what does that mean? Let me break it down. If you and your wife both work, and your wife makes decent money, and you make decent money, and you have, I would say, anywhere from $10,000 to $15,000 in your bank account to purchase a home, and I'm referring to the VA home loan, by all means, let's look at new constructions. If your wife doesn't work, and you're just supporting yourself with your BH, you have that good debt to income ratio, your interest rate, your credit score is good and all that stuff. Consider a pre-existing home, because I'm most likely going to be able to get you a better deal on a pre-existing home than I will on a new construction. Although, don't be fooled. These new constructions are offering great incentives right now. Let's say, for example, there's a new construction in Menifee. If you go to the link in my bio right now and you click first, before you click in that link in my bio, you go to follow and then go to the link in my bio. I would definitely appreciate that. It definitely enhances my ability to do this podcast. If you go to the link in my bio, you're going to be able to see a new construction that's currently in Menifee that is offering $11,000 towards home gallery. What that means is they're giving you free money for you to provide upgrades to your home. They're offering $10,000 to either rate buy down or closing cost assistance. That's not even including the hometown hero incentive that cuts your EMD or your earnest money deposit by half. In addition to that, the cost of solar is completely paid and already included in the purchase price. That's huge. That is a huge incentive that new constructions are giving. And every new construction is different, right? They're all different. They all offer different incentives. But again, the people that I've seen that win in new constructions are the people that are better off financially. Because what good is it? You might say, well, I'm able to afford that monthly payment. But what good is it for you to afford a monthly payment if you can't even put furniture inside the home? If you can't afford the commute that you have to do to work every day? Okay, so want to make sure that everyone understand that, because there is a lot of misconceptions, and there's a lot of people thinking that they can do things, and this is the most common things that I've seen right now with the current market conditions that we're experiencing right now. With that being said, guys, I've ran out of time today, but make sure that you subscribe, you hit that like button, you hit that follow button, and go to the link in my bio. for you to reach out to me, and I'll help you regardless of where you're at in the world, regardless of where you're at in the United States. I'll help you to get into your home. So I'll see you in the next podcast.